Hello everyone and welcome to today's No FOMO Charts, Crypto and Stocks TA Charts video. Today is June 29, 2024, just about 8:30 p.m. Eastern Standard Time here in the USA. Welcome everybody. This is a swing trading, position trading, and investing charts video and channel. I am No FOMO Charts. I'm on YouTube, X, and TradingView. Let's start off with crypto in this first half. Going to try to go faster in this video. Total crypto market cap, we are in a weekly support zone area, Bitcoin in a daily support zone area, Ethereum in a 0.236 Fibonacci support zone area. Solana recently broke out of a support zone, testing that price trend line breakout. Ripple also with the support zone test area. This week, a USA federal judge ruled that Binance must face the bulk of the US SEC crypto lawsuit. In terms of Ethereum spot ETFs, they are delayed. SEC returned the S1 forms to prospective Ethereum ETF issuers for revisions. And until the revisions are finalized and approved by SEC, spot Ethereum ETFs cannot launch and trade yet. So that early July target is delayed and postponed, most likely happening this summer for the approval. IRS will require crypto brokers to file 1099 tax forms for customer crypto transactions starting in 2025. And we'll keep track of cost basis data for customer tokens starting in 2026. VanEck and 21 Shares both file for new spot Solana ETFs. Let's get into the charts. Total crypto market cap, this is what I'm talking about. On a weekly chart, I do like that this candle's in progress right now. I need to wait 24 hours for the weekly candle to close, but it's bouncing off of this 26 EMA. It's good that we're not just having continual crashing on the red here on this candle. And it's not quite a downtrend yet. We had this lower low, lower high, but we have not had the serious lower low yet. So we're consolidating right now. If we can hold above the support level of 2.1 trillion, if we have a good week or two, this could actually turn to a morning star bullish pattern, and this could go back up to 2.4. So my support is 2.1 trillion and my resistance is 2.4 trillion. Now on the daily, just want to make sure our daily, it's still forming the left side of the pattern. So I'm not extremely bullish yet. I need to see something happen, double bottom, upside down head and shoulders, or uptrend reversal for me to get really excited about total. Let's go to Bitcoin. Very similar analysis here. Bitcoin on the weekly, bouncing off of that $59,000 on this weekly candle. I do like it's not continually red each week. And again, it's consolidating up here. Yes, there was a double top, but double tops can turn into double bottoms, just like we've seen with Apple stock as well. So we basically need a good catalyst to happen or good technical setup. So my resistance targets are 65,000 and 70,000. Remember, the halvening history is Bitcoin price usually needs about 2 to 3 months to stabilize, usually goes down a little bit or sideways, before you have a big bullish or bearish move. So maybe another month and maybe another catalyst is needed for Bitcoin to really survive here. On the daily chart, again, holding above that 200 EMA, it could dip down to that 200 EMA. As long as we hold above 55,000 and definitely $50,000 Bitcoin, we should be fine for a potential longer term move. And again, it is the left side here, so I'm not going to enter that just yet. I've learned patience is the key with Bitcoin, because if it crashes, I'm going to be very glad I did not buy yet as a trader. And when the pattern actually comes and forms, I am going to be very happy I caught that if it happens. Okay. Ethereum. Ethereum is actually not AM or double top yet. We did have this resistance here at 4,000, but it's not quite downtrending, what I'm saying. So we didn't have the super sell-off down to 2,300 or anything like that. It's actually holding a trendline support on the weekly just above 3,200. If we can hold that, it's good. Next resistance will be 3,600. Next target's down if we crash would definitely be somewhere around the 2,900 or 3,000 level. That's what I'm watching for very closely on the Ethereum weekly. We have not even tested the 200 EMA here in this red, which is 3,000. So just understand that we could just flash crash down because Ethereum ETF is delayed for a month or something like that. Then maybe hopefully go sideways and then have a next rally attempt. We just don't want the price to crash. Binance Coin, forgot to do this last week. But Binance Coin definitely rejected below the $700 level. This triangle seems to be over, and now we are rejecting down below a 3 years resistance trend line on the top. Very strong trend line. The Binance lawsuit against the SEC versus Binance lawsuit does not seem to help either. If we happen to dump, next target down is $500. Hopefully this is not a head and shoulders. But if we happen to hold the support level of 561, which is possible in crypto, hopefully bounce up to about 610 level. Solana on the weekly. What I do like here in the X zone is that the 200 EMA finally appeared. So that's definitely helping the bullish long-term case. The Solana ETFs are a maybe, but let's start with the bearish case. If this turns into a head and shoulders, this X is the target, 50% decline, which could be about $65. So the fact that it's low, high, low, we really have to hold this 123 level on Solana to survive here. Maybe we can make a lower high back up to 160 and start consolidating like this. But if we dump, then it is going to turn into a confirmed downtrend, low, high, low, and we might end up at $100 Solana. So we have to hold these support lines very, very closely. We had a nice run up to 200 basically, and the fact that it's cooling off now. The bullish case is we break out, retest 165, and then once we break out above 200, people are going to really get excited about Solana again. XRP. Now, starting off on this weekly chart, we are below the symmetrical triangle. Now that's resistance, so something to really watch out for. Ripple is not in a healthy uptrend right now on the weekly. I need to just remind people of that. We dumped below, low, high, lower, low. So our support level is 45 cents. Once we lose 45 cents, probably the bears are going to attack a little bit more. If we can hold this, at least consolidate, do a double bottom or uptrend reversal, that's how Ripple's going to survive and get out of here. But 45 cents is the key level, and then 50 cents is the key breakout spot. So you can see it's not angling up anymore. We went sideways for about 6 months, so that's why I got out of Ripple, and it's starting to angle down now. So it's not really looking that great for Ripple. Also on the daily chart, it was death cross for a long time since April. Let's back up here. Just go through all of these charts. And you can see Ripple's in trouble. Ripple's the one that's in trouble. So is Cardano. We have death crosses on a daily chart. That's not good. Doge, on the other hand, we're still in a golden upcross, but the price is below the 200 EMA. The only good thing is it's at a weekly support zone on the dotted yellow line, and it went sideways. That's good. We didn't crash below that. That's good. But we have lower low, lower high, lower low. So if this is going to hold, wherever it's going to hold here, it could hold at 11 cents, 10 cents, or 9 cents. We're probably going to have a reversal spot somewhere in this zone like this on a daily chart because low, high, low, high. And then I like to see it go sideways or upside down head and shoulders, uptrend reversal, and retest this whole bottom side. But it's going to be a little bit more of pain because I don't see a huge hammer candle or any pattern like that yet on the weekly. It's below the 200 EMA, which is a little bearish bias. And if we use Fibonacci, we are below the 618 zone. So the only thing I could say is Dogecoin has to hold above 11 cents. There is a little bit of upside down head and shoulders for me on the daily. I do like that. So the 13-cent level has to break. So 11 to 13 cents is our resistance and support zone areas. Let's go to Cardano. So first on Cardano, we're in a daily death cross. And you make that very clear. Daily death cross, for sure downtrend on the daily. There's no question about it. Now, the only question is, will the downtrend stop? That's the question. Will it stop? Where will it stop? So we're on a weekly. Remember, I brought that huge weekly parallel channel. And if we really need to hold this support level on Cardano right now, 37 cents. And I need to see something like a double bottom. That's how I knew this is the bottom. I made huge gains on this. Is support zone. Now we're on a slanted support zone. We must hold this area. If we lose it, it's game over for Cardano. Low, high, low, high, low. It's probably going to get out of there. So we need to hold 35 cents, target 43 cents or 50 cents to have a healthy rebound. So on the super bullish case, I still like Cardano because there's so much room up here to run. So much room, but we need Bitcoin to rally. Now, it's unfortunate that I was trying to target like $1 Cardano earlier, but I got out somewhere in the 60 cents area, 65, 60, because we're hoping for that bounce. We didn't get it, and I'm out of there, right? So now I'm looking for next setup. I do like that from my price, it's 50% off. 50% off is good, right? I need to see a break of that trend line. Until that happens, it's a downtrend. Shiba Inu. Now, what's interesting about SHIB is that maybe this could be a very long-term cup and handle pattern. We saw that happen in the stock market, and this kind of fits that. It's negative 50% retrace right here. So as long as we hold above 1500 SHIB, whatever that number is, right? 1500 on the right side, I just called 1500 SHIB, is that could be good. Then that can mark our spot. If we hold that support, we can have a huge cup and handle breakout if it happens on the bullish side. Now, on the daily chart, just like Dogecoin, we're under all the EMAs. That's not good. We're at the lower side of this trend line. I can actually adjust that more accurately like this. And at least it's a support trend line zone, but it's below all the EMAs. So it's mixed right now. And until it breaks out above this particular trend line in the blue, make it clear, it's not in an uptrend. So it has to break out above 1800 SHIB, and we need to not crash below 1600 SHIB. My alarms are going crazy. Link USDT. Now on the weekly, I like this. It's still weekly golden up cross. However, huge head and shoulders pattern that might be true, maybe. It's because it's happening in a weird spot for me. It's happening right above the EMAs, which is too close to the EMAs. It just means that there's just resistance here in the $20 to me. But if we want to take the real target, it could be 64% to the downside if Bitcoin crashes, which means Link will go down to 450 area, 460 area. But for now, it's holding this sideways horizontal support above 1250. That's why I'm not that scared. Once we lose this 200 EMA, then we can say we're in trouble here. So we need to hold about $12 Link, and the upside target for Link is relatively large, $15 to $18 on the resistance side. Okay, that does it for crypto. Let's move to stocks. Welcome everybody. Today's June 29, 2024. This is the stocks portion. Before I forget, if you like this video, if you learned something, go ahead and drop a like, hit that subscribe button, leave a nice comment or question request for next time, and that would be much appreciated, or share this video. It's always appreciated. Stocks. S&P 500 has a potential pullback, a daily lower high in the price. Nasdaq also potential pullback, daily lower high price pattern. Dow Jones is actually support zone test area. It's testing that trendline support in the middle. It's not really at the bottom of its move. Russell 2000 bounced off that daily trendline support zone test, had a nice upside down head and shoulders on the 4-hour. SMH Semiconductor ETF, daily trendline resistance zone test. That's a little bit troubling. This week's earnings, not really that much, just STZ, Constellation Brands. There's a lot more economic data coming out, and we also have a July 4th holiday in the middle of the week. Thursday, the stock market's closed. I'm also taking Thursday, Friday, Saturday, Sunday off. It's a huge national holiday. So I'll talk about that at the end of the stream. Manufacturing, PMI data, Fed Chair Powell speech, job openings, non-farm employment change, unemployment claims, services PMI, FOMC meeting minutes. What's July is closed. Average hourly earnings data and unemployment data as well. Some of the stocks news. Interesting, in the USA, the summer COVID wave is starting this month. We're seeing positive infections rising compared to about 3 or 4 months ago. So that's probably related to everybody going outside and traveling. And also, vaccines are starting to fade away in terms of somebody got a vaccine like last year or 2 years ago. So it's just something to think about. Is scientists, at least when I'm researchers at the CDC, the news I read, they're just monitoring that rate to see where's the peak of this summer. It's probably going to be lower, obviously. But record summer airline travel is starting this season as well. Last week, we had some record numbers for people flying around. Fast food restaurant chains are introducing a value meal deal this summer. So McDonald's having the $5 meal and Taco Bell with the $7 meal. gonna go check those out. Just kind of interested in that because the prices were getting too high because of inflation. And they're trying to increase their foot traffic, but their margins will shrink. Technology stocks forming short-term price pullbacks on daily charts. And again, the USA stock market is closed on July 4th. Let's go stocks. SPY, S&P 500 on the weekly chart. You can see we broke out of this resistance. We had a nice dip here in April, and then I called this bounce higher in June. But now we're in the breakout spot. So we could get a little retest back down here. We could get a retest back down to 530 area. So that's something to really watch out for because it's getting a little bit high in this zone. We're not quite in the extreme yet. It's not extreme yet because we need to go higher on the S&P 500 before we have a pullback. On the monthly, we are not anywhere in extreme overbought territory on a monthly. That's why I don't think the rally's over. So we're still in an uptrend. We're just towards the ceiling side of the resistance for the S&P 500. Everything is golden cross up. We are starting to see this downtick because the tech stocks starting to sell off. So that's what I'm saying. I'm short a few items right now, stocks in the market, just because of this setup. But I still think we're in a very, very long-term uptrend. So it's just the short term, we might see pullbacks or corrections to the downside, but long term, we're probably going to still see the market continue to the upside. Nasdaq, again, on the weekly, we can see that we had two dojis, shooting star at doji or shooting stars going sideways. That's not really that good. That's not good. So I'm a little bit more bearish on tech stocks because Nvidia and those types of stocks are pulling back. But as you can see, it's not extreme overbought like we were before the 2022 crash. So that's why I'm not really that scared in terms of a downtrend unless some major catalyst happens globally. But I like this high, low, high, low, high. We could pull back to a little another high, low, back down to about 458. And the resistance is 500 to the top side. Dow Jones. Now, Dow Jones, we had this support bounce. But since it's in the middle of its move, it's not really the greatest setup in terms of going long or short. So I'm just going to wait and see what happens with this one a little bit more. The MACD is already down crossed, though, on the weekly. And the daily did show signs of momentum. So you can see the fight between the shorter term and the longer term traders. And it's essentially just high, low, barely in an uptrend. So if we hold this support above 389, the target could be 400 to the upside. Downside target 383 if the trend reverses. IWM, again, this is not the greatest looking chart. Somebody could say it's a dirty cup and handle, but I would just say it's just riding this trend line here. There was resistance three times on this top side below 210. But we had a nice little short-term bounce above 200. Again, not in any extreme area. There was monthly momentum, which is playing out right now. Weekly MACD is down crossed. The daily chart is forming momentum, so that's what I like. We bounced off this upside down head and shoulders, so the upside target would be 207, the resistance side. And as long as we don't crash down, you could see the Russell 2000 and the Dow Jones, smaller growth stocks or smaller cap companies in terms of the total size, having a little bit of a nice bounce. DXY on the weekly approaching its weekly resistance area of 106. And we had that nice hammer bounce on June. The daily as well, starting to bounce off of its 200 EMA low. It's not even anywhere in the overbought zone. So I like this. A little bit more extension would be nice to get to that 106.50 area. Maybe even try to test 107, support at 105.50. And hopefully we don't dump down to there. US oil on the weekly, I like this. Longer term secondary golden cross, the 100 EMA over the 200. And it's starting to really consolidate into a very large symmetrical triangle. It's very nice. We had this nice hammer candle bounce off that 200 EMA a couple weeks ago, early June. And I do like the daily here. It's not quite momentum yet. So we could face a little bit of resistance at this $80 level as it's trying to establish its next higher low. So support at $78, next target 81. for shorter term trade. Natural gas. I'm still short natural gas here, and I believe that this was going to fade down, meaning as soon as we lost this trend line, I knew there's something wrong here with natural gas. There is that supply demand dynamic as well. It's a rising wage breakdown pattern after rejecting down twice. Now I'm just looking to maybe close on my short at 17 or 16. If it retraces all the way down to 14, that would be just one of my great ETF shorts of this year. But if it has to have some lower high somewhere, lower high, lower low, lower high, lower lower, lower high, lower low. So wherever it rebounds, I'm probably going to close that out. I already have a stop loss on it, so I don't have to worry about that too much, unless there's extreme news. So gold on the weekly right now, there was that triple top area below 224 here on this head and shoulders. Now, if it dumps, it hasn't happened yet, but needs to fall below 213 to get to that 206 level. High, low, high, low. Where's that next higher low? And where's the next higher high? Fading on the daily. It's still in the golden cross, so I'm not really worried about it, but it's not going up. Does that make sense? It's not trending up anymore. Silver as well on the weekly, testing that 12 EMA about $26 right now. And on the daily, there is a slight loss of the support on that weekly trend line. We just lost that support. So perhaps like copper, we might have a further sell-off down to 25 or eventually to 23, as long as this downtrend continues. If it happens to establish a level of support in reverse, that resistance level will be $27 to $28, which means that I'm waiting for a next setup. Or if I'm really impatient, then I look at the 4 hour and see, okay, we have a double bottom on this 4 hour. Perhaps it's a little bit 55% bullish to me based upon that. Now, copper on the weekly, this is what I'm saying. It's getting a little bit into the oversold area on some of these shorter term time frames. It's not going to break out for me until it breaks out above 27.52 and holds above that. It break, retest, and then bounce. If not, it's still going to dump down, maybe down to $26. So resistance 28, support 26. Now the final couple stocks here, Microsoft on the weekly chart is not extremely oversold. There was that weekly momentum. It's just we need a little cool down for the pullback here. And the daily trend line, we just lost that with the evening star bearish pattern on the daily. That's something to watch out for, but high, low, high. Wherever we sit this low, maybe it could go all the way down to 435. Remember, that's above the previous higher lows. So we just need to pull back to continue the uptrend into earnings. So the support zone area is 435, and we'll know we have a resistance breakout when we have 455 broken. Now, Nvidia. I closed out my short on Nvidia, just played that first level. The monthly is looking like this is a monthly shooting star. Excuse me. The weekly as well it didn't turn into a evening star pattern, so I just need to watch out for that. Now, the daily chart here, lower low, lower high. So I might open up another short if this turns into a head and shoulders. Let's measure that. 15% to the downside. That'll bring us back down to about $99 to $100 Nvidia. There is a strange price mismatch between Nvidia and AMD, so that's why people were really buying this, bidding this up. The 25% after a stock split scenario came true, so that's already over to me as long as it holds these particular levels. Right? It's barely riding that support level. So I played this short perfectly, closed that out into profit, and now I'm just waiting to see, are we going to bounce one more time on Nvidia back up to 140? Because that might take us to 150 if that happens. But if we reject, it's very tight right now. If we reject down, 110 is my target, to 100 is my secondary short target if that happens. Apple, you can see we broke out of that nice resistance zone on the weekly and start to go sideways for a couple weeks now. Now, in terms of this, is what I'm saying. So this could happen with tech stocks and Bitcoin as well. We had a double top, but we also had a double bottom. So then it turned to a consolidation play. Bitcoin is like right here right now. So we need a good catalyst for Bitcoin to go up, just like Apple's chart. Now, Apple had earnings here. I played that, and it rallied nicely all the way up to here. I closed that out way earlier though. And so now it's just hanging out here. Now, the next earnings is July 24th. That's just 3-4 weeks from now. We are gearing up for the next earnings catalyst. That's why pullbacks into earnings would not be abnormal to me. Okay, so it could be normal. I mean, it could just pull back, and then once we establish the higher low, wherever it is above 185, the breakout spot, and then we could have a next rally. It's okay. Or we could hold above $200, which is also okay. There's nothing wrong with that. The last couple here, Amazon is in a weekly uptrend. I do like this. It broke above the 188 resistance that was holding it down for a long time, but the broader market is pulling back. And I do like that this is setting up like this, high, low, and we had this nice ascending triangle type of breakout. Okay, if it keeps going, the target should be 8% to the upside straight into earnings. If it pulls back, probably 186.75, probably not going to 165 unless earnings crash. So 177, 186, and 200 as well. Meta here. Meta, we're seeing still in the higher low pattern on the weekly. High, low, high, low, high, low. And now it has to break above 529. Let's see when the earnings are. Earnings on July 24th. It's a month from now about. So for now, again, all of these are going to look the same. Sometimes they just move in tandem when there's no catalyst. So we're just under that resistance of 529, holding this little short-term uptrend right now. As long as we hold above 469, we're okay to pull back and rally back up to about the 500 area. Last two, Tesla. Yes, somebody could say, you know, this turned into an upside down head and shoulders to a wedge pattern breakout, and the wedge pattern breakout did break bullish. Very nice move here on Tesla, and that was building here on the weekly chart as well. The daily chart, even though this was kind of a choppy pattern, it turned into a symmetrical triangle that was tested to the upside, back tested, and then broke out to the upside to the 200 EMA, barely hit that 200 target. Now earnings again coming up for Tesla in earlier than Microsoft and Apple, a week earlier, July 17. So that's going to be the real catalyst that's going to take us to either 225 or crashes down to 170 long term. SMH, the last one we'll do today, the semiconductor ETF, has been in a super strong uptrend, very strong uptrend for about 1.5 years. But now we're at this resistance zone area, right? R. So if we could pull back healthily back to about 230, get a nice little play going on like that. 230 resistance, 283. Take a quick look at the oscillators. Because of Nvidia, this is still looking like bearish divergence to me on the weekly. The monthly is not extreme, but it is actually in the overbought zone. But there's no extreme bearish divergence yet. So it just looks like a dip or a pullback to me, not the absolute end here. But a couple months from now, if Nvidia does not recover, then this could turn into the evening star bearish pattern. I just need one more week of confirmation for that. So it's pending right now. But I do want to point out the weekly resistance. This price is below that. That's why that's significant. We lost this support area, and now it's a resistance. So unless tech stocks rally in the next 1 to 2 weeks, we could have a pullback into earnings, which will then define the trend, whichever way that's going to go. All right, everybody, thank you so much for watching this video. If you like this video, learn something, go ahead, hit the like button, click subscribe, leave a nice comment or request for next time. And remember, July 4th is a holiday on Thursday, so I will return on the stream for the video. It's a holiday here, so most Americans are taking 4, 5, 6, 7, one of those days off, or all 3 or 4. And we're returning on July 8th, or excuse me, we're returning on June 8th, Monday, for the stream, PM nighttime. All right, everyone, happy trading, have a nice vacation, and I'll see you in the next one.